Alright, welcome to my super basic options trading video. This is Jeffrey Turnmeyer. I'm just going to go through the super basic stuff you need to know to get started in options. So, first off, an option is a contract to do something with shares of stock, and it controls 100 shares per contract. Now, there are two types of options. One is a call option. If you are long the call, then it equals bullish. Number two, you have puts. If you are long the put, you are bearish in the stock market. Now, the next thing you need to know is they are time limited. Let me write this in red. It's very important. They are time limited. We call that the expiration. You need your move to happen before the expiration to make any money. Now, if your move happens to where you think it will, but you're running out of time, time works against you on the value. It makes your options lose money when you're long. So that's something to keep in mind. If you're not sure the time frame that your move is going to happen, maybe shares are better for you. But the benefit of trading options is that they are leveraged with that. Controlling 100 shares, they're usually a lower cost than the shares. Not always. They're usually a lower cost, which can turbocharge your returns if you get the move you expect before you run out, before your time value erodes away, or theta, as they call it. So, without getting too into this, let's go ahead and see what it takes to go long an option. We're going to buy a call, this 440 call. It's today's expiration. I'm doing this video on July 28th, 2021. If we go long this option, we just set it up. Let's try for the mid here. We're going to do a limit order. Do good for the day. Oh, a little bit cheaper. Let's go ahead and send that order. Boom. Working. And it may fill me here in a second. Now, we can do the same thing for a put. Let's go ahead and get basically the same price put. 436 is our strike. Our expiration's July 28th. We're going to go at the mid. Send the order. That one's out there working. Working. If I wanted to cancel these, in Tastyworks in particular, you just right click cancel. Oh, filled on the put. Let's see if we can do an opposite order. We got filled at 51. So if we make a little bit of money on it, we could get out at 53, make a limit order. View, this will count as a day trade if you're in and out the same day. Send the order. That's exactly what you would do right there. The order's out there working, and the call order is still unfilled. Looks like SPY is going down, so maybe calls aren't the best, so we can go ahead and cancel that one. Alright, a couple more things. The delta, right there, we can talk about briefly while we're waiting to see if SPY is going to drop any and fill us. So the delta right here is how much the option price changes for a $1 move in the underlying SPY. So a $1 move, if it goes from, on the call side, if it goes from 438 up or down, that option will change up or down by 40 cents at the 439. And the 440 is at 28-cent delta. So it's going to go up or down 28 cents for a $1 move. Now, the mid price is relatively the mid between the bid and the ask. And also the delta, hopping back to the delta one more time, it's kind of the probability that this option is going to end up in the money by the expiration. And the expiration is the end of today. So these are the probabilities that these options end up in the money by the end of the day at the current moment. And time value is going to erode away quickly as we approach the end of the day today, because these are expiring today. And these ones that expire on Friday have different probabilities. And if you wanted to go out to August or September, they all have different probabilities of being in the money, and they have different values on the option chain. So if you're certain your option is going to play out quickly, you can play close. I'm playing today. I'm trying to do a day trade on it, and it looks like I might get my money here in just a moment. Give it just a few more moments here before I wrap up the video. And if it looks like the price action is not going to go the way you want, you can just close it and get your money out of the market. You replace the order, say, alright, it's not going the way I want it to, so I'm just going to close it, and then I'm back out. So I just got in and out of an options position, lost $3 there, because all these prices multiply by 100, because they control 100 shares, but they give you the pricing for one share. So when I got filled to get into this trade, let's clear all the other ones, SPY only. So I got into the trade at 51 cents, and that represents $51 to get in the trade. I got out of the trade for $47. I took a $4 loss on this trade, in and out, as the SPY didn't quite work out the way I wanted. If I was trying to go a little longer and not wrap this up in one video, I may have been able to make a few bucks. Right now I just went ahead and closed it out for the sake of showing you how to get an order filled in the time frame of this video. So I hope you liked it. Hope you like and subscribe to the video. Hope you like the content. That's basically what you need to know to get into your first options trade. If you need to know some strategies and how to predict the price action of the underlying, subscribe to my channel. I'll have other content like that coming up in the future. But right now, that's basically what you need to do your first options trade and get in and get out. All right. Thanks for watching.